Alexander Green claims he knows the next Magnificent Seven stocks and claims these stocks can gain over 100,000%. I reveal each stock in this presentation so you don't have to buy Green's newsletter, and I give you my opinion on each stock. There's 7 stocks to uncover, so we're just jumping into things. Here's the clues for the first stock, the next Magnificent 7 stock. Number 1, the AI CPU developer that could be the next trillion-dollar company. The first stock that I am certain will become one of the next Magnificent 7 is one of the most important AI innovators in the world today. They design, develop, and license high-performance central processing units, or CPUs, the brain of any AI computing device. And they are expanding everywhere. The company only IPO'd in 2023, but already people are openly wondering if it will become the next trillion-dollar company. The company has its advanced CPU technology and over 280 billion chips in everything from sensors to smartphones to servers. The stock being pitched here is ARM Holdings, ticker ARM. Here's what to know about this stock. ARM was founded in 1990 as Advanced RISC Machines, a joint venture that grew into one of the most influential names in semiconductor design. Headquartered in Cambridge, England, the company went public on the Nasdaq in September 2023 under the ticker ARM and remains majority owned by SoftBank Group, which acquired control in 2016. As of June 2025, ARM carries a market capitalization of about $171 billion. Its business runs on an asset-light intellectual property licensing model. Instead of manufacturing chips, ARM focuses entirely on designing CPU architectures and earns revenue from upfront licensing fees, as well as ongoing royalties for every chip shipped using its designs. This approach scales without heavy capital investment and has enabled ARM-based chips to proliferate globally, with more than 325 billion shipped to date. The company dominates the smartphone market, powering over 95% of mobile processors. In fiscal 2025, ARM generated $4.01 billion in revenue, up 24% year over year, and surpassed $2 billion in annual royalties for the first time, a milestone that underscores the strength and scalability of its IP-driven model. ARM holds a commanding position in the semiconductor industry, with its designs powering more than 95% of smartphone chips worldwide. The company is leveraging this dominance to expand into high-growth areas such as artificial intelligence, cloud computing, automotive, and the Internet of Things. Its strong ecosystem of partners, including major industry players, and the rollout of its ARM9 architecture are driving next-generation innovation and keeping the platform highly relevant as computing needs evolve. Financially, ARM benefits from a high-margin, capital-efficient business model that relies on licensing and royalties rather than costly manufacturing. The company saw 25% year-over-year royalty growth in Q1 FY 2026 and continues to post record profitability with minimal capital expenditures. Rising AI-driven demand for advanced processors is accelerating adoption of its technology, supporting strong revenue momentum. However, ARM faces key vulnerabilities that investors should consider. More than half of its revenue still comes from smartphones, leaving it exposed to cyclical slowdowns in that market. Its valuation is elevated and can be volatile, while competition from the open-source RISC-V architecture continues to grow. The company also has significant geopolitical risk tied to ARM China, its largest licensing partner, and remains embroiled in ongoing IP litigation. Growth in PCs and servers remains limited compared to Intel's x86 dominance, and Q1 FY 2026 earnings declined 13% year over year, signaling that momentum is not uniform across all segments. The semiconductor industry's inherent cyclicality adds further uncertainty. The next major catalyst will be ARM's Q2 FY 2026 earnings report, scheduled for November 5, 2025, where analysts currently expect earnings per share of $0.14. ARM is a great company and they are growing fast, but that's already baked into the price. That's why the stock hasn't moved much in the last 18 months despite great earnings reports, so I'd pass until price comes down. Here's the clues for the second stock, the next Magnificent 7 stock number 2, the company reinventing the internet with AI. In the age of AI, so much information is being accessed all at once that many server farms and data centers are overwhelmed. According to Scientific American, NVIDIA's AI expansion alone will require 1.5 million servers annually, and the energy required to power all the new AI servers will be more than the energy needs of an entire country the size of the Netherlands. To run all these systems without the internet coming to a crawl is going to take an immense amount of network power. And this is where our company comes in. Thanks to an array of more than 300 data centers located in cities across the world, it is building one of the fastest and safest information networks our world has ever seen. In fact, its speed dwarfs its nearest competitors, Amazon and Google, and it is now the fastest network provider in most of the world's countries. This is Cloudflare, ticker NET. Here's what to know about this stock. Cloudflare is a global cloud services leader that connects, protects, and accelerates the internet for businesses worldwide. Founded in 2009 by Matthew Prince, Lee Holloway, and Michelle Zatlin in San Francisco, the company set out to make the internet faster and more secure. Today, Cloudflare operates in more than 330 cities across 125 plus countries, safeguarding nearly 20% of all websites and blocking over 190 billion cyber threats every day. With a revenue run rate surpassing $2 billion, the company reported $512.3 million in Q2 2025 revenue, up 28% year over year, serving over 12,000 paying customers, including many Fortune 500 leaders. Cloudflare's unified connectivity cloud offers more than 60 services, ranging from content delivery and DDoS protection to zero-trust networking, serverless workers, and edge AI deployment, all designed to help organizations of any size build faster, safer, and more reliable digital infrastructure. Recent innovations include AI Labyrinth, a tool to combat unauthorized data scraping, AI-optimized search (APIs), and the upcoming Cloudflare Connect 2025 conference in Las Vegas this October. Cloudflare's core strengths lie in its relentless innovation, unmatched global network, enterprise-grade security, and proven growth trajectory. The company's innovation engine drives continuous integration of artificial intelligence and edge computing, powering developer-centric tools such as Workers for serverless applications and AI orchestration, enabling rapid deployment at scale. Its fast iteration cycles and developer-first platform approach keep Cloudflare ahead in delivering leading-edge AI capabilities and automation. Backing this innovation is an expansive network infrastructure spanning more than 330 cities across 120-plus countries, providing ultra-low latency, robust DDoS mitigation, and industry-leading 99.99% plus uptime reliability through a redundant global backbone and strategic peering relationships. Cloudflare also excels in security, blocking billions of threats daily with advanced web application firewalls, sophisticated bot management, and a zero-trust security framework trusted by Fortune 500 enterprises. This is powered by a real-time threat intelligence network and comprehensive DDoS protection. Financially, Cloudflare's growth trajectory remains strong, with year-over-year revenue increasing 28% in Q2 2025 and over 12,000 paying customers, including a growing enterprise segment, positioning the company to capitalize on surging demand for AI infrastructure and cybersecurity solutions. Cloudflare faces several strategic challenges as it navigates an increasingly competitive and complex market. Despite strong revenue growth, the company continues to post GAAP operating losses, reporting $67.3 million in losses in Q2 2025 due to high research and development spending, global expansion investments, and elevated operating costs. Its path to sustained profitability remains uncertain. Competition is fierce, with cloud giants such as AWS, Akamai, and fastly pressuring market share and pricing power, especially in commoditized areas like basic CDN services where differentiation is difficult. Valuation also raises concerns, as the stock trades about 8% above consensus price targets as of mid-2025, creating vulnerability in the face of ongoing unprofitability, macroeconomic uncertainty, and geopolitical risks. Operationally, Cloudflare has faced criticism for service disruptions, misconfigurations causing access issues, and browser verification processes that frustrate users of alternative browsers like LibreWolf and SeaMonkey. These challenges are compounded by the risks of rapid expansion and growing user reliance on Cloudflare's infrastructure. Issues such as rate-limiting errors and complexities in Workers integration can impact developer productivity and business continuity if not addressed effectively. This is another great company that I would suggest waiting for a better price. But definitely put this one on a watch list and monitor dips. Here's the clues for the third stock. The third Next Magnificent 7 stock checks every box of what you want in an AI stock. It makes an essential product that the world can't do without. It has a long history of rising sales and earnings. It has top-notch management and rock-solid financial strength. Its profits are set to rise dramatically in the weeks and months ahead. And here's the really hard one. It has no competition whatsoever. Founded in 1984 and based in the Netherlands, the company is not a household name like Apple or Microsoft or Nvidia, and yet it holds a position just as crucial and just as dominant. The company specializes in the development, marketing, sale, and servicing of advanced semiconductor equipment, specifically photolithography systems. These are sophisticated machines used to etch circuit patterns onto silicon wafers, which are then developed into semiconductors. This is ASML. Here's what to know about this stock. ASML is a global leader in the semiconductor equipment industry, driving the chip-making revolution through its cutting-edge lithography technology. Founded in 1984 as a joint venture between Philips and ASM in Veldhoven, Netherlands, the company has grown to more than 44,000 employees across 60-plus locations worldwide. ASML dominates the market with over 80% share in extreme ultraviolet lithography systems, supported by strategic partnerships with industry giants such as Intel, TSMC, and Samsung. Its EUV machines are critical for producing the smaller, faster, and more energy-efficient chips that power artificial intelligence, mobile devices, and advanced computing. This essential infrastructure underpins nearly every part of the modern technology ecosystem. ASML's strategic strengths center on its unmatched market position and technological leadership. The company commands an estimated 80% share of the extreme ultraviolet lithography market, giving it a near monopoly position that creates a powerful competitive moat. Its profitability remains strong, with gross margins reaching 53% and Q2 2025 results exceeding expectations. The broader semiconductor industry, projected to reach $1 trillion by 2030 with a 7.5% annual growth rate, provides ASML with a vast and expanding market opportunity. EUV lithography, responsible for more than 80% of ASML's revenue, remains essential for enabling the next generation of semiconductor advances that conventional technology cannot achieve. This leadership is further strengthened by surging demand from artificial intelligence infrastructure and advanced memory chips, placing ASML at the center of the industry's growth. Additionally, its recurring revenue model, driven by long-term service contracts and regular system upgrades with major chip makers, ensures predictable, high-margin cash flows to support ongoing innovation. Combined with robust free cash flow growth, a global operational footprint, and strategic partnerships with industry leaders, ASML is well positioned to maintain its technological edge and market dominance for years to come. ASML faces several risk factors and vulnerabilities that could challenge its otherwise dominant position in the semiconductor industry. Geopolitical exposure remains a major concern, as ongoing US-China trade tensions threaten to impose stricter export controls that could limit sales in critical markets. The company is also highly dependent on a small group of major customers, TSMC, Intel, and Samsung, making it vulnerable to changes in their capital expenditure plans and production strategies. Like the broader semiconductor sector, ASML operates in a cyclical industry prone to boom and bust demand patterns, which can be further amplified by global economic uncertainty. Management has already signaled a cautious outlook, projecting flat to potentially declining revenue in 2026, a factor that has contributed to the stock's underperformance compared to European benchmarks in 2025. Operational pressures also remain significant, with massive R&D spending and a complex global supply chain driving high costs that could compress margins if revenue growth slows. Although ASML exceeded expectations in Q2 2025, a prevailing narrative of near-term weakness has weighed on investor sentiment and stock performance relative to peers. ASML is one of the most important companies in the entire world. It's also cyclical, as is all semiconductor stocks. Right now, the price is too high to invest, but it will likely fall like it has in the past, and that's when you'll want to buy. Here's the clues for the fourth stock. This company is ranked the #1 software vendor in the world for AI, data science, and machine learning. For example, the company was hired by Ferrari to improve prototype testing in their Formula One and road cars. The Cleveland Clinic, which admits 303,000 patients annually in its 23 hospitals, used this company's data science software to maximize the efficiency of its patient admissions. As a result, Cleveland Clinic saw a 1-hour decrease in wait times per patient. Airbus used this company's software to maximize its output of A350 airliners. They increased production by 33%. Energy companies like BP, ExxonMobil, Kinder Morgan, and PG&E are using its AI to maximize output. This would be Palantir, ticker PLTR. Here's what to know about this stock. Palantir Technologies, founded in 2003 by Peter Thiel and a team of co-founders, began as a defense-focused software company serving U.S. intelligence and military agencies. Over the years, it has evolved into a major enterprise AI and big data analytics leader, expanding beyond its initial government roots into sectors such as healthcare, finance, and energy. The company went public in 2020 and today offers a core product suite that includes Gotham for intelligence and defense operations, Foundry for enterprise data integration and decision-making, and AIP for AI-driven insights. Palantir's current market position is formidable, with a Q2 2025 market capitalization between $373 and $438 billion, and a stock price around $178, up an impressive 130% year-to-date. Revenue momentum remains strong, with Q2 2025 results surpassing $1 billion, reflecting 48% year-over-year growth. U.S. revenue climbed 68% to $733 million, while U.S. commercial sales surged 93% to $306 million. The company forecasts 2025 revenue of $4.14 to $4.15 billion. Palantir maintains deep relationships with the U.S. government, particularly the Army and the nuclear sector, while rapidly growing its commercial business. Though it has an international presence in markets such as Israel and the UK, its primary growth engine continues to be the US market. Palantir's success is anchored by 4 key strengths that have propelled its transformation from a niche defense contractor to a mainstream enterprise AI powerhouse. Revenue acceleration has been striking, with the company surpassing $1 billion in quarterly revenue for the first time in Q2 2025. Overall revenue grew 48% year-over-year, driven by a remarkable 93% expansion in U.S. commercial sales, while full-year guidance was raised by 45% as Palantir continues to outperform analyst expectations. AI and innovation leadership remain core to its strategy, positioning Palantir as a premier enterprise artificial intelligence platform capable of enabling data-driven decision-making in highly complex environments such as fraud detection and operational optimization. Its human-centered analytics approach differentiates it from traditional software providers and has fueled adoption beyond defense into broad commercial markets. Strategic partnerships further amplify its reach, with major contracts such as a $620 million Army Vantage deal for data centralization, a $100 million nuclear operating system, collaborations with Boeing, and initiatives in mortgage fraud prevention driving systemic adoption across industries. Market performance reflects these achievements, with shares surging 130% in 2025 and Palantir increasingly recognized as a hyper-growth tech company. Its US-centric focus provides stability while institutional confidence continues to rise. This combination of commercial momentum, AI leadership, and high-impact partnerships marks a critical inflection point for long-term sustainability. Despite Palantir's impressive growth and innovation, the company faces several critical weaknesses that could challenge its long-term trajectory. Security and system vulnerabilities became a focal point in October 2025 when the U.S. Army labeled Palantir's NGC-2 platform a very high-risk system due to cybersecurity flaws, including unrestricted data access, lack of user activity monitoring, and unvetted application integrations. The report triggered an 8% plus stock decline and raised concerns about the company's ability to safeguard sensitive information, with Palantir asserting that the issues have been mitigated but skepticism persisting. Extreme valuation and volatility further compound risk. The Economist labeled Palantir possibly the most overvalued firm, citing a valuation exceeding 600 times 2024 earnings and 105 times its 2025 revenue forecast. The stock has experienced 45 single-day price swings over 5% in the past year, leaving it vulnerable to sharp corrections if market sentiment shifts or growth expectations falter. Ethical and privacy controversies also weigh on the brand, as the company faces scrutiny for its role in surveillance, predictive policing with potential bias concerns, and partnerships tied to international conflicts such as in Israel. It has even declined projects like the UK's digital ID system due to public backlash, highlighting the reputational and regulatory risks of its government-focused work. Finally, geographic and contract dependency limits diversification. Palantir's performance remains heavily tied to U.S. government contracts, making it susceptible to policy changes, budget cuts, and slower than expected international growth. While its commercial expansion offers promise, the company's risk-reward profile remains complex and requires careful monitoring by investors. I personally wouldn't buy Palantir unless it had a massive dip. However, I have been saying Palantir isn't a buy all year long and it's up over 100%, so I could continue to be wrong. I just realized this video is going to be over 30 minutes if I do all stocks in one video. So I'm going to split this into two parts with the second video coming tomorrow. Before you go, don't forget to grab my free report. The 10 stocks I believe you can buy today and hold forever. It's packed with solid long-term picks you won't hear hyped up anywhere else. Just click the link in the description, enter your email, and I'll send it straight to you.